Exactly.
The Subcommittee on Commerce, Manufacturing, and Trade will now come to order. The chair recognizes himself for 5 minutes for the purposes of an opening statement. And good morning, and I want to welcome everyone to our hearing this morning on the sharing economy. We are lucky to be here this morning to be able to talk about a sector of our economy that is actually putting people to work. All of us here on the dais endure the typical government skirmishes. We spend a lot of time quibbling over the proper size and the proper role of the federal government. So today, it's refreshing to remind ourselves that the private sector is often working to solve problems even in spite of us some days. And the private sector is doing so in a way that fosters jobs through innovation. The opportunities sharing platforms provide are often in addition to, not necessarily instead of, the streams of income available through traditional employment sources. The sharing economy has captured the entrepreneurial spirit of many Americans already. Those who engage in freelance jobs are expected to skyrocket to 40% of the workforce in the next 5 years, and almost 8 million will be participating in a sharing economy. The sharing economy is an excellent example of why the fight exists for smaller government. I want to hear today about how technology has built in accountability and built in consumer protections into their platforms. Because eventually we must confront the question of whether and how Congress responds to these types of firms. Many suggest no action is warranted either by Congress or local regulators, and others are seeking direct and immediate intervention both at the federal and the local level. There should be some limited government oversight, particularly where safety is significant, and firms should be thinking about privacy. Firms should be thinking about cybersecurity from the outset, lest they invite the very type of regulation that they sought to avoid. But generally speaking, the sharing economy companies do face regulations, like most other firms, under the typical patchwork of federal and state laws. And I, for one, am more concerned about existing regulations hurting new jobs than I am about the need for new regulations. The CEI estimates that the federal government already has stifled progress through regulation to the tune of almost $2 trillion per year. Meanwhile, the sharing economy has generated $15 billion in global revenues in 2013 and is likely to generate $335 billion annually by the year 2020. We should be highly skeptical of interventions that take away new conveniences and measurable benefits for consumers. Sharing platforms are inherently good at providing reputation feedback loops. As we look at any disruptor, we should ask ourselves, is more regulation needed? Or is someone just concerned about change and worried about change of the status quo? I want to thank the witnesses for participating. I look forward to a lively and informative discussion. I will yield back my time and recognize the ranking member of the subcommittee, Ms. Schakowsky, for 5 minutes for an opening statement.
Thank you, Mr. Chairman, for holding this hearing on the sharing, some call gig economy. This is a topic absolutely deserving of our attention, discussion, scrutiny. Over the past few years, Americans have begun to interact in ways we never imagined just a decade or even less ago. The sharing economy is one of the byproducts of technological change. Today, people hail rides, book rooms, hire a contractor, purchase groceries at the push of a button. This is the fastest growing sector in our economy, and while there's undoubtedly a convenience factor for those engaged with the gig economy, there are a number of adverse consequences as well. For many millennials, the gig economy model of employment may be appealing for a time, providing scheduling flexibility that many young people desire. But for many older workers who used to have full-time employment or younger workers seeking steady full-time work, this transformational change is not always positive. The model of this economy where there are people seeking economic predictability and stability Also often eliminates benefits like health care and pensions, and it means more questions about whether they can make ends meet, much less save for their children's education, their parents' elder care, or their own retirement. The gig economy companies argue that the individuals who generate earnings through the use of their technology are independent contractors. They claim only to operate a neutral technological platform and enabling individuals to connect. Making that claim may enable gig economy companies to avoid legal liability for much of what happens as a result of the use of their platforms, enables them to avoid Social Security contributions and requirements to provide overtime pay, workers' compensation, and unemployment benefits. The workers are atomized and unable to collectively bargain in their own interest, and this shift many work-related risks from employers go to workers. However, these entities are very often directly involved in almost every aspect of the transactions that occur by way of their technology. They maintain standards for users of their apps, and they have the ability to remove users from their platforms altogether, often without any mechanisms, by the way, to challenge their removal. In June, the California Labor Commission found that Uber drivers are employees rather than contractors. That determination, if upheld, would require Uber to provide reimbursable expenses, Social Security, workers' compensation, and unemployment insurance benefits. Many gig economy businesses do not ensure that their employees meet licensing, tax, and zoning requirements that are in place for the industries against which those businesses seek to compete. I believe those companies and their employees and contractors need to meet all existing requirements if they intend to compete with other entities honoring those standards. It is also important that liability questions are addressed by the businesses operating in the gig economy space. In addition, is additional insurance coverage needed to protect employees or customers of gig economy businesses? When additional protection is required, how do gig economy businesses ensure that their employees and customers are adequately covered? These gig economy businesses are largely data-driven, and there are few restrictions on how that data is used or protected. Highly sensitive information, including background checks, home addresses, credit cards, and background information, bank account information, and travel patterns, is often collected by these businesses. Uber recently changed its privacy policy to allow the company to ask for location details when users aren't actively engaging with the app. It also allows Uber to access to a user's contact list. Most Uber users probably have no idea about these policy changes, which is why greater oversight, transparency, and communication are needed in this emerging sector of the economy. All of these issues must be addressed if we are to ensure that the sharing economy is as much about improving the lives of working Americans as it is about increasing the market caps of gig economy companies. So I thank the witnesses for being here today. This is a truly important, seminal discussion that we have right now. I look forward to their testimony, and I yield back the balance of my time.
The chair thanks the gentlelady. Chair recognizes the chair of the full committee, Mr. Upton, 5 minutes for an opening
Well,
statement.
thank you, Mr. Chairman. You know, today we are here to discuss one of the most promising aspects of our recovering economy, the sharing economy. Significant innovation and advances have enabled new platforms to connect self-employed individuals or small businesses with the consumers who demand those goods and services. Sharing economy is growing in leaps and bounds. Believe it or not, in a decade, it is expected to generate $335 billion annually. That sort of growth cannot be ignored. So this series of hearings about disruptors, and I would include the Internet of Things and the vehicle-to-vehicle communications under that umbrella as well, is so important as we work to better understand how these innovative companies impact consumers, job creation, and yes, our economy. I'm always encouraged by the creativity and ingenuity that we see in America, and this hearing is a great forum to learn how real people are taking advantage of new opportunities to make a better life for themselves and their families. I know it's true in Michigan, as it is in the rest of the country, as families are glad to have new ways to make ends meet. One of the most intriguing aspects of this model is that it is not tied to any particular industry. The press regularly highlights the disruption in the lodging and transportation sectors, but there's innovation in every facet of the U.S. economy. And as with any developing marketplace, we must recognize the risk of stifling innovation with reactionary regulatory measures. At a time when jobs are still hard to find and balancing the budget is a challenge, we should not risk job creation with hasty calls to regulate. Where new technologies and competition are responding to consumer needs and doing so safely, we should be asking ourselves if reducing the regulatory burden makes sense. This may be true for both the new entrepreneurs and incumbents. The sharing economy has also given folks across the country a chance to make decisions about how and when they work in a way that was not feasible even a few years ago. So we're familiar with high-profile leaders in the sharing economy, but there are many other platforms that are using technology to connect niche markets that have not been able to connect before. And I've seen that firsthand, and I'm interested to hear more about those areas of the sharing economy. Our witnesses today represent a broad and diverse spectrum of the sharing economy, and I'd like to welcome in particular Michael Beckerman back to the committee, albeit on the other side of the dais this time around. I look forward to hearing all your stories and experiences with the sharing economy and how we can foster an environment for continued job growth and community development, and I yield back.
Chair, thanks to gentleman. Gentleman yields back. We are expecting the ranking member of the full committee, Mr. Pallone, to be here at any moment. But pending that, let me just go ahead and introduce our witnesses, and then when Mr. Pallone arrives, we'll yield back to him for his opening statement. So we do want to thank all of our witnesses for being here today. I thank our witness for taking time to testify before the subcommittee. Our witness panel for today's hearing will include Ms. Lucille Smith, a driver partner with Uber Technologies Incorporated, Mr. Michael Beckerman, President and CEO of the Internet Association. And you know, Michael, after you left the committee, so many people asked what happened to Michael, and people said he went to a better place. So I guess the Internet Association is defined as a better place. Mr. Bob Passmore, Assistant Vice President for Personal Lines Policy with the Property and Casualty Insurance Association of America. Mr. Dean Baker, Co-Director of the Center for Economic and Policy Research. Mr. Alex Chris, Vice President and General Manager at Intuit. And John Lieber, Chief Economist at Thumbtack. We do appreciate all of you being here today. We'll go ahead and proceed with the witness testimony, and we may allow Mr. Pallone to give his opening statement when he arrives. So we appreciate all of you being here. We'll begin with you, Ms. Smith. You're recognized. Each of you will have 5 minutes to provide a summary of your testimony and give an opening statement. Ms. Smith, you're recognized.
Good morning, Chairman Burgess, Ranking Member Schakowsky, and committee members. My name is Lucille Smith, and I appreciate this opportunity to address you today and speak about my experience working with Uber. I began driving with Uber in June 2014, and prior to that, I worked in the legal field and served 8 years in the Air Force. My son is also in the Air Force and will soon be deployed to the United Arab Emirates. Uber has been a great opportunity for me and many others. What I like most about Uber is the flexibility. It allows drivers to make money on their own time. I don't have a boss to report to. I don't have to be on call. I work when I want to, for as long as I want to, or as little as I want to. I use Uber as supplementary income to finance my travel. I'm from the British Virgin Islands, and I use my extra income to visit my family. And when I want to travel, I don't need to ask permission, I just go. Driving with Uber has also helped me to discover the city in new ways, which has been very rewarding. In fact, I've encouraged friends and even riders to become drivers because I think it's a great opportunity, not only to see new parts of the city, but to connect with people in the community. And these are people that I would never otherwise have met. Every rider that I've met is grateful for the choice and the convenience that Uber has brought to their lives. I particularly enjoy the people component of being an Uber driver. Having traveled all over the world, I can strike up a conversation with anyone and point out new restaurants or new shows in town. And when it comes to my riders, I've had so many good experiences. I remember I picked up a couple once from the airport and took them to a Redskins game, and when we arrived, it started to rain, and the young lady was very concerned about her hair, so I gave her my umbrella. I understood what it would be like to sit in the rain and ruin your hair. So it was just a great opportunity to help people in large and small ways. I have worked in traditional jobs before, but there's nothing else out there where you can set your own schedule and your own goals. Sometimes drivers ask me, how much money do you make in a week? And the answer is you can make as much as you want to. If I want to make $500 to fly to St. Thomas for Christmas, I can do that. With other jobs, the only way to earn more money is to take another job or to get a promotion. And that can take years. So that freedom, it removes a lot of stress from your life, and that freedom is priceless. Knowing you can log in anytime and make money, that's incredible, it's unmatched. So it's an opportunity that I enjoy, and I know many people feel the same way. Thank you so much.
Chair, thanks, gentlelady. Chair recognizes Mr. Beckerman. 5 minutes for opening statement, please.
Thank you. Chairman Burgess, Ranking Member Schakowsky, Chairman Upton, and Ranking Member Pallone, and members of the committee, thank you for inviting me to testify. My name is Michael Beckerman. I'm the President and CEO of the Internet Association, which represents the world's most innovative Internet companies. The Internet Association is the unified voice of the Internet economy and its global community of users. We're dedicated to advancing public policy solutions to strengthen and protect Internet freedom, to foster innovation and growth, and to empower the global community of Internet users. Included in our membership are more than 35 of the world's most innovative companies, including the sharing economy platforms such as Airbnb, Flipkey, Lyft, Sidecar, and Uber. And as an advocate for these companies on the local, state, federal, and international level, the Internet Association has witnessed firsthand the often heavy-handed and misguided regulatory approach in markets throughout the country for these platforms. These companies have an extraordinary story to tell, a story about job creation, about economic growth, opportunity, and life-changing flexibility. Ride sharing and home sharing do get most of the attention, but these business models are really just the tip of the iceberg. Companies like Instacart, Washio, TaskRabbit, GetAround, Handy, and Thumbtack, who's here with us today, are changing the way we shop, do our laundry, rent cars, improve our homes, and so much more. The incredible consumer benefits of these platforms pales in comparison to the benefits of flexible earning opportunities for those that opt in to meet consumer demand. What we're seeing across the country is a tale of two cities. In some communities, regulators embrace new technology and competition. In these communities, consumers and the local economy have seen job creation and growth. Unfortunately, there are other communities where policymakers and regulators have put up roadblocks that block consumer choice and competition. In these areas, the community is worse off when arbitrary barriers are placed on new entrants to the market. Competition is stamped out, growth is stifled, and opportunities are lost. In my testimony this morning, I'd like to outline a few important principles the Internet Association thinks is helpful in this policy debate. But first, I'd like to help put the on-demand or sharing economy into the proper macroeconomic context. Sidecar or Uber, Lyft, they're neither taxi companies nor transportation companies. They're technology platforms that connect supply and demand. Likewise, Airbnb is not a hotel or lodging company. It is a technology platform that connects supply and demand. To just give one example, back in 1980, let's say, if you wanted to ride to the airport, you might pick up the Yellow Pages and look up a number for a car service. Then you'd pick up the phone, dial the number, talk to the dispatcher, and arrange for a ride. In that pre-internet age, the Yellow Pages served a similar function to what Uber or Lyft does today. It connects supply, the driver, with demand, the rider. But today, thanks to the internet and advances in mobile payments and other technology, this connection of supply and demand happens in real time and in a seamless way for consumers. And the same is true for the other sharing platforms. Based on our advocacy for the internet industry and for the sharing economy specifically, the Internet Association suggests the following principles guide the committee as you wade into this debate. First, Evidence demonstrating the clear benefits to consumers must be taken into account. These benefits include lower prices, higher quality of services, and an overall increase in consumer choice. Second, in weighing these benefits against perceived harms, lawmakers should consider whether sharing economy services may in fact be safer than incumbent counterparts. Third, in listening to complaints against sharing economy companies in local markets, assess whether these complaints capture a genuine consumer protection concern and are not merely complaints against increased competition that will benefit consumers. And finally, recognize that the sharing economy platforms already self-regulate through various mechanisms that are hardwired into the technology, such as consumer ratings, payment systems, and GPS tracking, not to mention the intense competition between all these platforms. And I do elaborate on each of these points in my written testimony, which I ask to be submitted for the record. In closing, the sharing economy is an exciting innovation that collapses the distance between those offering services and those consuming services. The end result of this arrangement is an increase in quality and lower costs. The sharing economy provides clear benefits to both consumers and those who wish to earn extra money, and evidence of this fact must be considered before taking legislative or regulatory action. Thank you for allowing me to testify, and I look forward to any questions the committee may have.
Chair thanks the gentleman. Chair recognizes Mr. Passmore, 5 minutes to summarize your testimony, sir.
Let's turn on the button first. Good morning, Chairman Burgess, Ranking Member Schakowsky, and members of the committee. My name is Bob Passmore, Assistant Vice President for Personal Lines Policy at the Property Casualty Insurers Association of America, better known as PCI. On behalf of our nearly 1,000 member companies, I thank you for your invitation to speak today at today's hearing. PCI members are at the heart of the sharing economy. While innovators in the sharing economy have designed new ways of using technology to improve business models, insurers have been innovating new ways of providing protection for centuries, and similarly will be the grease that will enable the sharing economy to reach its potential. The sharing economy is typically not new commercial activity, but rather is a new business model that allows individuals to use their personal time and resources to engage in commercial activity with the potential to provide for more efficient use of resources for society while essentially creating millions of single-person businesses. Where the sharing economy poses the biggest challenge and the most controversy is when they enter into a commercial activity that's highly regulated when conducted by a traditional business such as a taxi company or a hotel. Essentially the same activity but on a much smaller scale, but connected to a large sharing economy company. The policy question becomes, what is the appropriate level of regulation, and does applying the same level of regulation render the sharing business model impractical or impossible? Insurers are certainly interested in understanding the answers to those larger policy questions, but of primary concern for insurers are critical insurance issues that are raised, as these business models blur the line between what has traditionally been thought of as a commercial or personal exposure. A prominent example of this dynamic has been evident in the emergence of ride-sharing or transportation network companies, or TNCs. TNCs had initially relied on the driver's personal auto insurance policies for coverage, with the companies themselves providing some coverage that applied if the driver's coverage was exhausted. However, most personal auto policies specifically exclude coverage when the vehicle is being driven for hire, leaving TNC drivers facing some significant gaps in coverage. And since almost every state has a motor vehicle financial responsibility law that requires vehicle owners to maintain some kind of auto insurance coverage, disputes and coverage litigation were inevitable. If these coverage disputes were to result in court decisions imposing coverage for driving for a TNC on a personal policy that was neither intended or priced for, this potentially shifts the cost of the risk associated with driving for hire onto the personal auto insurance system, requiring that all drivers bear the cost of the activities of a relatively small number of TNC drivers. The good news is that TNCs and insurers have been able to reach a consensus on a law that supports the sharing economy business model while providing appropriate insurance protection, as well as disclosures that protect drivers, consumers, and insurers. The consensus model also allows for the development of different private sector business solutions for personal and commercial insurance coverages that can evolve over time and has already been adopted in over half of the states. Over the last year, it's become clear that while there are significant insurance challenges presented by the sharing economy business models, solutions can be found by following a few principles. First, market-based approaches are preferred for both sharing business models and insurance, but in some cases, state laws may need to be clarified to protect consumers and policy language certainty. Awareness of issues is essential. Many may not be aware if they have the right insurance when they enter into these activities. There needs to be proactive disclosures by the sharing business of what the insurance issues are, what coverage the sharing business is providing, and what additional coverage one may need to get prior to participation. Finally, state laws and regulations need to be flexible to allow for different insurance solutions. The sharing economy business model creates opportunities for both personal lines and commercial lines insurance products, and the excess and surplus lines insurance market is where many new businesses, such as these sharing economy business models, find their coverage, and those avenues need to be open to the sharing economy business models as well. PCI's mission is to promote and protect a competitive insurance market for the benefit of consumers and insurers. Our members are committed to developing and providing new insurance products to support commercial and consumer innovation for the sharing economy. We appreciate that Congress has taken an interest in these issues and look forward to continuing to work on sharing economy issues in the future. Once again, on behalf of our members, I thank you for inviting us to share our views, and I would be happy to answer any questions that you might have.
Chair thanks the gentleman. Gentleman yields back. Mr. Baker, recognized for 5 minutes for summarizing your opening statement, please.
Thank you, Chairman Burgess and Ranking Member Chakowski. I appreciate the opportunity to address the committee. My name is Dean Baker. I'm the co-director of the Center for Economic and Policy Research. I want to raise some general issues about the sharing economy. Certainly, I would agree with comments that have been made that it offers great opportunities basically to take advantage of idle resources, as Ms. Smith had indicated, her labor, her free time. Of course, with apartments, other sorts of idle resources to put them to greater use. That's the great opportunity, the great benefit of the sharing economy. The great risk is that it risks undermining a set of regulations at national, state, and local level that have often been put in place for very good purposes. And that's my real concern that I want to address here. And in doing so, I want to say I strongly disagree with Mr. Beckerman's comment that this is simply the internet version of the Yellow Pages. We have that. It's called Craigslist. We aren't talking about that. These are companies that have an active role in the operations that we're talking about here. So very quickly, I want to outline 4 areas that I talk about in my testimony where regulations are being called into question. First, labor regulations. Secondly, consumer, both safety and quality regulations. Third, a question of property rights that has come up in a lot of different contexts. Fourth, anti-discrimination laws and regulations. And fifth, an important issue that the committee should be concerned about, issues of tax collection at all levels of government. Starting with the issue of labor regulation, as Ranking Member Chakowski raised in her opening testimony, we don't know that sharing economy companies will provide the same sorts of protections that we expect that Congress and state and local governments have given to traditional employees. So that means wage and hour laws, do minimum wage laws apply, workers' comp laws. These are issues that should concern us. We don't want to see sharing economy companies benefit simply because they're capable to undermine those laws. I should also point out that in many cases, perhaps most cases, this is not an insoluble task. For example, Uber could very easily use the information as available to ensure that all its drivers are getting minimum wage laws and they're paid in accordance with wage and hour standards. The second area, consumer safety regulation. We've extensive sets of regulations to ensure that when you get into a cab that the driver is a safe driver. I abuse my mother in this context. She's an 84-year-old woman who's a very decent person, and she has a Washington State driver's license. I really do not think she should be driving an Uber. This is the sort of issue that we should be concerned about. We ensure that people who drive cabs, drive commercially, have commercial driver's licenses. We want to make sure that you have good drivers for Uber or any other car driving service. Cars should be safe. Again, insurance issues, insofar as those are being settled, that's a big step forward, but I should point out that was not the original intention of Uber. That was done under public pressure. In the case of, if we look at Airbnb, again, are they renting rooms that are safe? You know, do we know that they meet fire codes? This should be an important concern. Certainly when we make sure that hotels, or at least we try to make sure that hotels are not fire traps, we would want to make sure the same is true of rooms rented through Airbnb. The third issue has to do with property rights. Many leases, many apartment leases prohibit subletting. In many cases, someone could sublet through Airbnb in violation of that lease. Again, does Airbnb bear responsibility? I would say we would want a situation where they do bear responsibility. Condo associations also often prohibit subleasing. Again, are people renting out rooms through Airbnb or whole units? in violation of condo laws. And then, of course, it goes beyond that. Very often you have rent stabilization rules, you have zoning rules. These have all been called into question by Airbnb. I'm not saying Airbnb is necessarily wrong in these circumstances, but we need clear regulation. The fourth issue, discrimination. Again, we have well-developed sets of rules prohibiting discrimination based on race, gender. We don't want discrimination against the handicapped individuals. We want to make sure, in case of Uber, we want to make sure we have handicap accessible vehicles. Again, this is something that is a matter of legitimate public concern threatened by the sharing economy companies. The last point, we know in the case of traditional employers, they're obligated to take out money for taxes for people, for their workers, and also, I should say, if you have someone renting out a unit, that can be done through Airbnb. This is a real concern. It's not a concern just for the purpose of tax collection. We don't want someone to come to April 15th and suddenly find they owe the IRS $5,000 because nothing's been taken out of their paycheck. So these are very real concerns. So just to sum up, the whole point to me of the sharing economy is that it offers great opportunities. We want to take advantage of the new technology. This should not be a way where firms are able to prosper simply by finding a more effective way to evade the law. Thank you.
Gentleman yields back, Chair. Thanks. The gentleman, Mr. Chris, you're recognized for 5 minutes for summarizing your opening statement, please.
Good morning, and thank you, Chairman Burgess, Ranking Member Schakowsky, and members of the committee for providing Intuit the opportunity to be here. My name is Alex Chris from Intuit, and I am the Vice President for QuickBooks Self-Employed Business. I appreciate the opportunity to speak with you today about the sharing economy, and I am pleased to provide some insights we have gathered from close collaboration with our customers. I will also outline 3 recommendations government could take to ease the burdens of sharing economy workers. As context, Intuit was founded over 30 years ago with one core mission that remains today: to improve people's financial lives so profoundly they cannot imagine going back to the old way of doing things. We currently serve more than 45 million consumers and small businesses with our QuickBooks, TurboTax, and Mint offerings. In the past few years, we have noticed an acceleration of a trend that began decades ago. We believe this trend to be a massive shift in employment towards a more independent or self-employed workforce. Intuit recently conducted a study forecasting the self-employed will grow to represent 43% of the workforce by 2020. A very fast-growing segment of this new workforce is the sharing economy. According to our data, 3.2 million Americans are earning income from the sharing economy. Within 5 years, our survey suggests the total population of sharing economy workers will more than double to 7.6 million. What is often not fully appreciated is that the people who are self-employed and in the sharing economy are ultimately a small business of one in the eyes of the U.S. tax structure. They have a unique set of financial management needs. They often commingle business and personal expenses in a single bank account, making expense management and deduction tracking burdensome. They get paid a gross amount, often on a weekly basis, making visibility into their real income or what is safe to spend nearly impossible. And they are often unclear about their quarterly tax obligations, as this is most often a new and unfamiliar requirement. It is with these unique needs in mind that we created our QuickBooks Self-Employed offering. We strive to make the business aspect of being self-employed simple and pain-free while improving our users' cash flow. I would like to outline 3 opportunities policymakers could begin to take action on to improve the lives of this fast-growing segment of the economy. The first is to clarify what constitutes a record for Schedule C tax compliance. Sharing economy workers find customers and income at the touch of a button on a mobile device, yet they are required to keep paper records to verify their Schedule C deductions. This requirement raises questions about the regulatory definition of what a record entails. Flexibility with respect to the term record would benefit the growth of this worker segment. The less time people spend managing paperwork, the more time they have to earn a living. The second is to enable sharing platforms to give guidance without triggering worker classification issues. Sharing economy platforms can play a role in helping this segment of the workforce meet and understand their obligations. Many sharing platforms limit the advice they provide to workers for fear of triggering employment regulations that would characterize this workforce as employees. Providing this information would be beneficial to the sharing platforms, the workers, and the IRS. This creates an opportunity for government agencies that oversee classification guidelines. Clarity around the type of communication companies can share with self-employed workers will enable them to access helpful information regarding financial literacy, tax obligations, and savings. Finally, the third recommendation is to update government programs to support the self-employed. A great example is the Department of Treasury. They initially released its MyRA retirement savings product to employees to access exclusively through employers. They are now planning to allow individuals to open accounts, but they were not initially being considered and had to wait for benefits to be opened up to them. Creating a shift in mindset where self-employed are considered part of the workforce is something government agencies should prioritize. We encourage the committee to explore ways to adapt our current structure to meet the needs of the sharing economy workers so that the growth and success of this segment continues. Once again, Chairman Burgess, Ranking Member Schakowsky, and members of the committee, thank you for giving Intuit the opportunity to share insights from our sharing economy customers, and I look forward to answering any questions you may have.
Gentleman yields back. Chair thanks the gentleman. Mr. Lieber, you're recognized for 5 minutes for an opening statement, please.
Good morning, and thank you for the opportunity to testify today. My name is John Lieber, and I'm testifying on behalf of Thumbtack. We are a San Francisco-based technology company that matches consumers with service professionals to help them accomplish projects that are central to their lives. We are honored to be a part of this discussion here today on behalf of our growing technology companies and the small businesses we serve. Thumbtack's network of more than 150,000 active professionals help customers get started with more than 5 million projects each year. We are proud to say that we'll be putting more than $1 billion into the pockets of these professionals this year, and multiples of that in years to come. Our professionals are active across all 50 states and here in the District of Columbia, and they offer services across more than 1,000 categories, from dog walking to bathroom remodeling. About half the service professionals on Thumbtack have been in business for themselves for 5 or more years, and similar numbers report that they have 1 or more employees. 2/3 say that the businesses they run on Thumbtack is their primary form of income. Our most active categories are in events, such as DJs, photography, and catering, home improvement, including lawn care, house cleaning, plumbing, and electricians. And we also offer wellness services like personal training and a variety of lessons from Spanish to horseback riding. And though we are headquartered in San Francisco, it is only our 11th biggest market. We operate only in the United States for now. Although the hearing today is officially about the sharing economy, this name is frequently misapplied to a variety of new business technologies that are connecting people together. Thumbtack does not consider ourselves to be part of the sharing economy. We like to say we're part of the real economy. Technology is enabling the businesses who use Thumbtack to find work faster and cheaper than they ever could before. And not to pile on the yellow pages here, but while a previous generation was limited to placing an ad in the yellow pages and waiting for the phone to ring, Thumbtack directly connects these small businesses to customers who are looking for their services. The ease of introducing small service businesses to new clients is solving one of the biggest problems that these businesses have, and along with back office support tools like those offered by Intuit, is lowering the cost of starting and growing a successful small business. We believe that we are empowering these professionals to realize their dreams of working for themselves, and the stories that we hear from our pros about what Thumbtack has enabled them to do are inspiring and powerful. In my written testimony, I discussed some of the effects that technological disintermediation is having on both consumers and the professionals who serve them, and I'd like to mention 2 of them now. First is that although disruptive technology companies are bringing attention to issues of worker classification and workplace benefits, for small businesses like the ones that use Thumbtack to grow, these issues aren't new. Because Congress has passed responsibility for certain elements of the social safety net onto employers through a combination of mandates, tax incentives, and payroll taxes, we've created a 2-tier benefit system in this country, one for individuals who generally work full-time at larger companies, and one for everyone else. The decision to go work for oneself has long meant giving up the comforts of traditional employment, including paid time off and a variety of tax-preferred health and retirement benefits. And although Congress has attempted to extend some of these benefits outside the workplace through the Affordable Care Act and tax-free savings vehicles like IRAs, there is more that could be done. To the extent possible, benefits should be tied to the worker and not their place of work or their form of compensation. Small businesses are also intimately familiar with issues surrounding worker classification. Although many of the businesses we speak with would love to bring on full-time workers to help them expand, the costs not just in wages, but in compliance and benefits are often prohibitively high. The decision to bring on a full-time worker can frequently mean with dealing with unexpected and expensive mandates, such as California's recent decision to require that all employers, regardless of size, provide paid sick leave. Often it is far easier to rely on independent contractors who generally don't qualify for these benefits. The second issue I would like to emphasize for the committee is the need for better measurement tools. Although all signs point to the rapid adoption of technology that will connect people together and allow an increasing number of people to work outside of the traditional employment system over the coming decades, we don't have a great count of how many people are actually engaged in this kind of work. The Bureau of Labor Statistics hasn't had dedicated funds to study this segment of the workforce, which they call contingent workers, since 2005. Private researchers and corporations are attempting to fill the gaps, but the government should be doing more to keep up with the pace of change in the labor market by more accurately tallying and releasing data on the number of self-employed and independent contractors on a more regular basis. Thank you again for the opportunity to testify, and I look forward to taking your questions.
Chair thanks the gentleman. The gentleman yields back. The chair would ask unanimous consent that Mr. Pallone be allowed to give his opening statement out of order before we proceed to questions. Mr. Pallone, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Today, this subcommittee has the opportunity to discuss one of the fastest-growing sectors of the U.S. economy, and that's the sharing economy, which is just not millennials hailing rides and renting spare rooms from their phones. In communities across the country, Americans are using their computers and smartphones to order a meal, find a gardener, sell homemade crafts, and even request a dog sitter. Just like Google and Facebook before them, businesses like Uber, Lyft, and Airbnb are rapidly evolving from names into verbs. One recent study predicts that the 5 biggest sectors of the sharing economy generated $15 billion in revenues last year and could exceed $330 billion in a decade. In my home state of New Jersey, Uber has already signed up 9,000 drivers. These businesses can offer benefits for both buyers and sellers. Some platforms provide temporary access to goods and services that buyers might not be able to otherwise afford. Consumers enjoy the convenience of being able to summon a ride, request a dry cleaning pickup, or order groceries from a device in their pocket. And sellers can benefit from a new source of income, sometimes just by renting items sitting unused in their basements or garages. But the growth of the sharing economy has also raised a number of difficult issues. Many services track their users' location, potentially putting privacy and safety at risk. To verify users' identities, some apps store credit card information, home and work addresses, and other personal information. Consumers often have no way of knowing if their information is protected from a data breach or if it will be sold to or shared with an unknown third party. In addition, many apps allow both buyers and sellers to view ratings and reviews of past transactions. These reviews can push bad actors out of the market by making sure users are trustworthy and legitimate, but it can also be difficult to tell if these reviews are accurate, and it's unclear whether reviews and rankings alone can protect user safety. As more Americans seek to provide services in the sharing economy, the question of whether they are employees or independent contractors remains unresolved. Other than the logo on the door, there's little obvious difference between Uber drivers and cab drivers, but for the workers, a lot is riding on the distinctions. Unemployment benefits and overtime pay are just a couple of the workplace protections at stake. State and local governments across the country are also grappling with the regulatory challenges posed by the growth of the sharing economy, including whether companies are responsible for paying local taxes, providing insurance, or conducting background checks. The sharing economy is about transforming innovative ideas into services we depend on, but that innovation must be coupled with basic protections for all participants, including worker protections, privacy, data security, and safety. And I'm confident that we can find a balance that protects consumers while preserving innovation and ensuring a level playing field for businesses. And I think that I again thank the chairman for holding this hearing and giving me the opportunity to make my statement. Thank you.
The chair thanks the gentleman, and the chair would like to remind members that pursuant to committee rules, all members' opening statements will be made part of the record. We conclude then our witness testimony, and we thank you for your presence and your testimony today. We'll move to the questions part of the hearing, and I'll recognize myself for 5 minutes for the purposes of questions. And Mr. Chris, let me ask you, because the study that we both referenced that estimated that almost 8 million people will be participating in a sharing economy very soon. So begs the question, why are so many people showing up to participate in the sharing economy?
Thank you. I think one of the things that we've seen is people are coming in, and we actually refer to this as the on-demand economy. On-demand refers to not only the ability to push a button as a consumer and get a ride or have someone deliver food to you, but also the idea that workers are able to come in and push a button and get a job. I think that's where we're seeing more and more people coming in when they have the ability to, before just literally at the push of a button, find income. This is changing behavior, just as we see from consumers. This is changing behavior of workers. Right now, we're seeing 79% in our research, 79% of the workers in on-demand are working part-time. Many of them are coming from traditional jobs and adding this to create incremental income as well. And as they test their way in, I think we'll see that they continue to evolve. Many of these workers right now, again with our research, are less than 1 year working in on-demand. So while this is wonderful we're having this conversation, it is so early in the game right now. It'll be interesting to see how it evolves.
Ms. Smith, let me ask you kind of the same question. I mean, how did you arrive at the decision that this was something that you wanted to do?
It's a great opportunity to make money by one's choice. So I've worked in traditional jobs before. This opportunity to log in and earn money on any schedule that I chose for any goal that I had, it's just incredible. So that was very attractive to me.
Mr. Lieber, we'll probably disagree about the amount of money available to the Bureau of Labor Statistics, but one of the things they do is provide to Congress the first Friday of every month to the Joint Economic Committee. I'm no longer on that committee, but I was. So during the harshest part of the recession, it was part of my job to hear their report of the first Friday of every month. And we all talk about the unemployment rate and the U6 numbers and what the employment rate really is, but it seems to me this, during studying for this hearing and understanding better the sharing economy, that, I mean, this is a way for some of those people who have been chronically unemployed now, may have left may even have dropped out of the labor workforce participation. But again, you can punch an app and earn some money. That's a pretty powerful notion, isn't it?
Absolutely. And what we find of business users of Thumbtack is many of them are leaving a corporate job and they're kind of putting their finger in the wind to test out if they can actually cut it as a full-time caterer or a photographer. And by lowering the cost of getting these people into their own business and by delivering consumers to them, we think that we're creating this opportunity that didn't exist in years past and making it easier than ever for them to start and go work for themselves.
And it's certainly not part of this hearing, but having spent time on the Joint Economic Committee and hearing those figures from the Bureau of Labor Statistics and the people who were discouraged from ever finding or looking for traditional employment again, I mean, this seems to be like a way back into the workforce that really probably wasn't even available or only available on a limited basis as the years of the Great Recession began to unfold. Would you agree that this is a fifth pathway, if you would, back into employment?
Absolutely. I think this represents a tremendous opportunity for people. And what is exciting to me is that for people who have a skill, say you're a locksmith and you're good at locks, but you haven't had a chance to build out your customer base yet, this is the opportunity for you to go online, find customers, and get your business started quickly, easily, and start getting customers pushed to you. And we've heard a lot of stories like that of people who have been down on their luck, people who just left the military, people who lost their jobs, or people who are looking for what next to do in their lives, and they're able to come to these platforms, come online, and start finding new work.
Well, I gotta believe we've just beginning to scratch the surface. Mr. Beckerman, let me just ask you, because I remember my predecessor in this office, at the time was Majority Leader in the late 1990s, described to the Dallas Chamber a situation with this thing was new, it was e-commerce. He said Congress doesn't understand it. They're very likely to try to regulate it and tax it, and when they do that, they will kill it. Do you think he was correct in that assessment?
Look, I think this is a new area and providing incredible opportunity, and Congress does need to be a little careful not to put too heavy of a hand on this and regulate it too much, because as we're hearing from a number of the witnesses, it's providing opportunities for them that didn't exist before, and it's a great opportunity for our economy for people to get back to work and earn extra money for their families.
Very good. Thank you. And my time's expired. I'll recognize the ranking member of the subcommittee, Ms. Schakowsky. 5 minutes for questions, please.
Thank you, Mr. Baker. I want to ask him questions, but first I want to read a piece of testimony that I'd like to put in the record from Inder Parmar, who says he's been a professional driver in New York City for 15 years. He says, I began working for Uber because I thought I could earn more money than I had working for other black car companies. Uber's rates sounded like a good deal. When I first started working with UberX, the minimum fare would be $12. Uber would take 10% of each fare, and the rest would be mine to keep. Within just months, though, Uber changed its payment rates, and while the price of gas and my car payment stayed the same, the 10% commission I paid to Uber became 20%, and the $12 minimum fare dropped to $8. And then he also says the Uber's business model is to flood the streets with cars regardless of how much work is available for them. In New York City, Uber added 20,000 new cars to have us compete with 13,600 taxis and another 40,000 black cars and car service liveries that were already on the streets. It says that Uber doesn't care if there's 100,000 trips a day. Those trips could be split between 10,000 drivers or 30,000 drivers. And he says, Uber says, they're not my employer to the point that you make, even though they direct my every move and control my income and can punish me. With Uber, we have no voice. I don't get to set the rates. Uber takes away my fare income if a passenger has a dispute with them over the fare they set. And if a passenger complains that I took a long route, Uber takes the money back without giving me a chance to explain myself. Friends of mine have been suspended because their passenger rating was too low, even though they had been accused of doing nothing wrong. What was too low? Less than 4.5 out of 5 stars, a B+. So I just wanted to talk to you. Here's somebody who thought he was going to make more money, have more control, and finds that really Uber, that says they're just a website or just a technological platform, is controlling their life.
Yeah, well, I think this is very problematic, exactly the sort of situation that I think we have to be concerned about. So just to be clear, being able to order a cab over the internet, wonderful thing. You can be on a smartphone, that's a great thing. But on the other hand, these people, for practical purposes, are employees while they're on the job. And again, we aren't asking a lot if we were to tell Uber that, you have to make sure that your drivers make at least the minimum wage. They have the technology to do that. If they're not competent enough, then they should be replaced by a company that is. I mean, that's a very, very simple thing. So extending employee-type relationships, employee-type rights, for example, collective bargaining. Again, people may not like it, but that is the law. It doesn't make sense that you have collective bargaining over here, but we're going to call ourselves Uber, now you don't have collective bargaining. So these are issues that I think are very much a proper concern of Congress and of state and local governments as well.
Let me just ask you this. So many sharing economy firms have said that they're just an app. They describe themselves not as employers, but rather as technology platforms. So how would you compare the type of work being done by workers who have traditionally been deemed independent contractors, such as electricians, realtors, or consultants, with those in the sharing economy?
Well, traditional contractors, they control their time, they control their wage rate, they control what they do. I sometimes write a paper, sometimes I'll be paid on commission. Well, someone contacts me, they say, we need this in 2 weeks, I'm going to decide what it looks like, I'll decide the content. That's really not the case with Uber. They specify the rules. In a lot of ways, it's a good thing. We want to make sure that, when you drive an Uber, that, the car is safe, other conditions are met. But that's not the situation of an independent contractor.
Let me, Mr. Lieber, in your testimony, you seem to suggest that most sharing companies fall into one of two buckets. That those that have a mostly hands-off approach, perhaps such as Etsy and eBay and others that impose certain requirements on the independent contractors, such as Uber. Can you further explain those two types?
Yeah, the distinction there is we think of there being as kind of a marketplace company, which is kind of matching buyers and sellers in a marketplace, giving them information to make informed decisions on their own, and a dispatch company, which is directly pushing a service provider to you. You ask for your groceries delivered, and the groceries then come to you. And I think these are kind of two separate types of technologies that are out there today.
Okay. And so, Dr. Baker, do you agree that there are two types of sharing companies, and would the need for more or less regulation depend on which of those buckets a company falls into?
I think that's exactly right. Inevitably, there'll be some gray areas, but, I think Uber's a very clear side of the gray area. This is an employee-type relationship.
Thank you. I yield back.
Gentlelady yields back. The chair thanks the gentlelady. Chair recognizes the gentleman from Texas, Mr. Olson. 5 minutes for your questions, please.
I thank the chair and welcome to our witnesses. I'm excited about the sharing economy. all this new technology, new innovation. But with regards to these changes, I ask myself, how does this impact the market? Is it good? Is it bad? And most importantly, is it safe? My first question is for Mrs. Smith, Mr. Passmore, and Mr. Beckerman. Unfortunately, we don't hear a lot about the good actors. We hear about the bad actors, stories from back home. For example, people who use the sharing economy to do harm. Back home in Houston, Texas, a driver in the shared economy assaulted an intoxicated woman. The background check missed him because he had been in jail for most of that time. My question is, who should be liable for protecting our consumers from bad actors in the shared economy? Mrs. Smith, your thoughts, ma'am.
I believe that's an Uber policy question that I'm not comfortable answering.
Thank you, ma'am. Mr. Beckerman.
Thank you. I would add, I think there are a number of safety precautions that are hardwired into the technology that provides accountability that didn't exist prior and that does not exist on taxi cabs. And no industry is 100% safe or 100% perfect. Certainly hotels are not and taxi cabs are not. But the two-way rating system, having GPS tracking, and the background checks that all the sharing economy platforms do on the ride-sharing side are very comprehensive, and they seek to have a transparency, accountability, and trust for their users, and I think that goes a long way.
Mr. Passmore, your thoughts, sir.
PCI represents auto, home, and business insurers. So I think the question gets a little bit beyond the scope of what I'm prepared to answer for. But you know, what we tried to do is clarify the auto insurance issues to make sure that, you know, if you get involved in an accident, that there's a clear line of where the injured parties can go to collect for their damaged vehicles and injuries and things like that.
And my final questions for the entire panel start with you, Mr. Lieber. Sadly, my home of Houston, Texas, is ground zero for human trafficking in America. Interstate 10, according to our FBI, right through Houston, Texas, is the #1 highway for human trafficking to come through. Girls mostly being sold into slavery right through my hometown. I've held several roundtables back home with law enforcement officials, local mayors, all these people involved in this. It's a real big problem. But I'm concerned that the bad guys can use a shared economy to promote human trafficking. So my question is, what can this shared economy do to stop human trafficking? Mr. Lieber, your thoughts.
Just speaking from Thumbtack's perspective, we don't offer any kind of services that would be appropriate to be abused in that fashion. Trust and safety is the #1 important factor for Thumbtack, getting you a trusted professional to your door to do a great job for you, and marketplace integrity is something we take very seriously.
Mr. Chris, your thoughts, sir?
Providing financial management software through Intuit, I think this would be beyond my expertise to answer.
Mr. Baker.
I don't know if things sharing economy companies can specifically do, but the one thing I would say is that insofar as Congress puts, or state governments for that matter, put in regulations in place to try to crack down on human traffic, again, the point is it's got to apply to sharing economy companies as well. So if you have regulations that make it more difficult for, say, a traditional cab company to be involved in this in some way, certainly you want that to be applied to, you know, your ride-sharing services also.
Thank you. Mr. Passmore. Any thoughts about human trafficking? How, you're not quite directly involved, but any thoughts about how you can influence this, make sure we separate the bad guys from the people who are getting abused by these sharks?
Again, it's a little outside of our realm of expertise, but I would say that, you know, if you're applying, no, I don't really think I'm qualified to answer that question.
Mr. Beckerman.
Safety and security is first and foremost for all of our member companies, and you know those kinds of activities I think are outside of the scope of the services that our companies offer. But I think you know technology certainly can help, and when you look at all of these platforms, the community that they create and the trust they create, I think could be helpful in stopping some of this.
And finally, Mrs. Smith.
As a driver, I have never encountered anything remotely connected to human trafficking, and so I don't feel informed enough to give a detailed response on that.
Well, thank you. Thank you for your service. We can agree. Go Air Force, go Navy, beat Army. I yield back.
Chair thanks the gentleman. The chair recognizes the gentleman from New Jersey. Mr. Pallone, the ranking member of the full committee, 5 minutes for your questions, please.
Thank you, Mr. Chairman. In May of this year, Uber updated its privacy policy to allow the company to track users' location whenever its application is open, even if consumers are not actively using the application. In other words, if I take a ride on a Monday, Uber still can be tracking my location the following Thursday. And of course, Uber is not the only sharing economy firm to track its users. The constant collection of that data does raise privacy concerns. So I wanted to initially ask Mr. Baker, it's my understanding that most consumers do not understand the extent to which mobile applications, such as those created by sharing economy firms, can access and store data about consumers' locations. Do you agree with that statement?
I'd be inclined to agree, but I have to say that's really not based on any data, just simply anecdotal. I mean, I do know people, obviously, who use Uber. I'll confess to having never used it myself, but I do know many people, and they have no idea of what data they collect and what they do with it. And I think it's certainly a proper concern of Congress that there be at the very least clear disclosure, if not actual regulation, on what they can do with it, but certainly disclosure of what their practices are.
Well, from expressing the privacy concerns that I share, but do you see any, what about this idea of storing location data permanently rather than discarding it after the transaction is completed? Is there some way, obviously from a privacy concern, you would rather see it discarded after the transaction is completed. What would be your view on that?
Well, I think it'd be totally appropriate to say that, to prohibit those companies from keeping that data because, well, on the face of it, you're contracting with them for a ride. And, that seems to me that should be the end of the relationship unless, people consciously decide they want a further relationship with the company. But again, the understanding, I think most people understanding when they're taking an Uber is they're contracting for a ride, not to give away details of their life to third parties.
Okay. Now, should sharing economy firms be more upfront about when, how, and why they're tracking user locations, in your opinion?
I think absolutely. Again, I think, two separate issues here. One, do you restrict what they can do? Open question, I couldn't give you, reasoned answer on that, but that's one issue. Second one, disclosure of what they're doing. And to my mind, that has to be a clear responsibility, that there have to be clear rules so that everyone at least can know. Some people may not care, and that's fine. But a lot of people may want to know that if they're taking an Uber, this information is being kept and quite possibly shared with a third party.
All right. Now, some apps, including Uber, give companies access to other personal information, including users' contacts and address book. It's my understanding that most consumers do not understand the extent to which mobile applications, such as those created by sharing economy firms, can access and store data from consumers' contacts and address books. Do you agree, and you want to talk about the privacy concerns with that?
Well, that's, to my view, I've heard accounts of that. I assume that they're true, but, to my view, that's absolutely amazing. Again, you're contracting with Uber to get from point A to point B. You aren't, at least I think almost no one is knowingly contracting with them to give them access to their address book. So it's very hard to see why they would have a legitimate reason to get access to that sort of information.
Well, let me go to Ms. Smith. In order to use Uber, a person must download the Uber app, giving permission for Uber to collect that person's address book. Can you explain how that information is used by Uber?
I'm not sure how it is used by Uber, but when an individual does download the app, they are given an opportunity to agree to what Uber may do. And as far as the location, I believe it's that the information may always be collected only when the app is being used, or never. And so an individual does have an opportunity to decline if they're not comfortable. And whenever you do download the app, there's an agreement that you must agree to in order to use the app. So everyone who uses the app agrees to the conditions that are in the agreement.
Well, let me ask Mr. Beckerman to comment on that, and also, since there's only a few seconds left, We all know the critique, Mr. Beckerman, that privacy policies are too long and full of legalese, especially on a mobile device. But how are your members taking steps to make sure consumers are aware of the extent to which their information is collected and sometimes shared or sold? Or if you want to also comment on what Ms. Smith said.
Thank you for the question. First, on the tracking, if you look at the settings in your phone, it does indicate that the tracking only happens when the app is open and you're using it. And the ability to look at the map and see where you're going is part of actually the safety and security features on the phone. You know, my wife left her purse in an Uber once, and we're able to retrieve it immediately because of some of these features. And had she left it in a cab, we probably never would have seen it again. When it comes to data security and privacy, there are laws in the books from Congress and the FTC that apply to all companies, sharing economy companies, internet companies, brick and mortar companies, and I don't believe there are any gaps in the coverage of protections that we have.
All right, thank you. Thank you, Mr. Chairman.
Gentleman yields back to the chair. Thanks, gentlemen. Chair recognizes the gentleman from Illinois, Mr. Kinzinger. 5 minutes for questions, please.
Well, thank you, Mr. Chairman, and thank you all for being here. It's helpful to us. Appreciate it. Chairman, thank you for holding the hearing that's the first of what I expect will be a great series of hearings. I think there's a lot to be excited about in the sharing economy, and I appreciate the committee's consideration of the economic benefits, new choices for consumers, and the underlying policy impacts that have come to light. Last week, Business Insider ran an article on the sharing economy, and it started with, quote, "The rise of the sharing economy has fundamentally changed the business landscape, and some companies are going to have to adapt to survive." And I think that sentence captures some essential characteristics about the sharing economy. It is new, it's changing, and it's adapting to meet market demands. In such a dynamic economic space, I think the committee's approach towards this regulation is pragmatic and, frankly, the correct course. Sharing platforms have provided two apparent benefits in particular. They've given workers another source of income in addition to traditional work options, and they've also given consumers additional choices. Ms. Smith, by the way, I'm an Air Force pilot, so thank you for your service. And I'm still in the Air Guard. I love it. So, but I want to say thank you for your service and for your, I guess, your sons as well. So that's fantastic. I appreciate your testimony and for highlighting that many Uber drivers use this service for supplemental income. Do you think this is something you're going to utilize long term?
Absolutely.
And do you know, and what is it you enjoy about it? What is it that makes you think that this is going to be a long-term process for you?
Just about everyone that I have driven has expressed the joy, really, at having the alternative. Whether they didn't have a car at all, or they constantly relied on others to take them from place to place, or a bus was not available where they lived, or a taxi was more expensive. Whatever their reason was, they just were so grateful to have the opportunity to have a means of transportation that's affordable and safe.
And as a user of it, I can agree. And I'll tell you what's neat too is the whole idea of the surge pricing. If you don't have enough drivers, it helps drivers come online to say that there's a surge. Consumer makes a decision, the supply makes a decision, and it kind of works out for everybody. Mr. Beckerman, as sharing platforms proliferate, is there a way to maintain light touch regulations in a way that promotes competition on a level playing field? And can local governments peel back some unnecessary regulations on incumbents to some equilibrium that encompasses sharing platforms to the extent that they directly compete?
Thanks for the question. Yes, I think so. I mean, we've seen two different kinds of regulations in local communities. Some that were maybe written in the 70s and 80s that just couldn't anticipate any kind of internet platform at all, and those are being peeled back. But we are seeing in some areas new regulations that are put in with the sole purpose of blocking or discriminating against these platforms, and those are the ones we're most concerned about.
Okay. And Mr. Passmore, some commenters suggest that the insurance problems are too hard to solve when a sharing platform is involved. How has the insurance company worked to solve the coverage issues in the transportation network company context? Is the insurance industry hopeful that insurance questions raised by other types of sharing platforms can be resolved?
Yes, as I mentioned in my testimony, we worked very hard with the sharing economy companies, the TNCs, to develop a solution that would work and is being implemented in over half the states right now. As for other sharing economy businesses, I think a lot of them have sort of observed what has happened with the transportation network companies and sort of been more proactive about making sure that their participants, whoever, whether it's Airbnb hosts or Thumbtack vendors or what have you. They're being more proactive in making sure that they're aware of the insurance issues, making it clear what kind of insurance they provide and what they might have to get on their own. Those kind of developments are very encouraging.
And I think every major invention or leap in humanity or leap in technology or a leap in any way we do business sometimes is met by resistance, and that's natural. People, feel uncomfortable. They don't know what the future holds. But the great thing I think about a free market capitalistic economy like ours is we have the ability to adapt, and adapting is what makes us great, and frankly, why we continue to lead the world. So with that, Mr. Chairman, again, thank you for doing this. This is very beneficial, and thank you to the witnesses, and I yield back.
Gentleman yields back. Chair thanks the gentleman. Chair recognizes the gentleman from North Carolina. Mr. Butterfield, 5 minutes for questions, please.
Thank you very much, Chairman Burgess and Ms. Schakowsky and members. Thank you very much for holding this hearing today, Mr. Chairman. I was just looking at the memorandum, and I think it's a very appropriate topic. How the sharing economy creates jobs, benefits consumers, and raises policy questions. End of quote. A very appropriate topic, and I thank you so very much for it. As you know, Mr. Chairman, I am now the chair of the Congressional Black Caucus. For several months now, we have been examining diversity among the Fortune 500 companies in America, and we realize that taking on 500 companies at one time is a daunting task, and so we have started to target the technology companies in particular. And we have found that African Americans have been largely excluded from all levels of technology. African Americans are a missing link in the tech economy. And until we see full participation in the tech economy, America will never truly unlock its full potential. And that's why I like the topic of this hearing. That's why, as part of my role as the chair of the CBC, I have focused on our efforts of increasing diversity within the technology sector. In May, the CBC launched the CBC Tech 2020, which is an initiative to bring together the best minds in the technology, nonprofit, education, and public sectors to chart a path forward to increase minority inclusion at all levels of the technology industry. The goal of CBC Tech 2020 is to achieve full representation of African Americans at every level of the industry in 5 years. Over the past few months, I have taken this message across the country and even to the heart of Silicon Valley. And now I'd like to ask just a few questions on a few of these subjects. Let me start with Mr. Beckerman. Thank you for participating, and thank all 6 of you for participating today. Mr. Beckerman, as I said, I am interested in the inclusion of African Americans and other minorities in the technology industry, both as owners and employees as well as vendors. How many companies, if you know, are members of, well, I'm sure you know, are members of your association?
36.
36. Let me write that down. 36.
I'm glad I got that one.
All right. Yeah. I've got 4 here, so I don't know how we're going to do on the other ones. Out of your companies, how many have African American CEOs, if you know?
I'd be happy to get back to you on that.
All right. Question mark. Please get back. How many have an African American on their board?
I'd be happy to get back to you with those numbers.
All right. The reason I asked the board question is because we found of the top 20 technology companies, collectively they have 189 directors, and of those 189, 3 are African American, so we are particularly interested in that as well. And do you know if any of those companies have released their diversity data? I know they do the EEO ones, but have any of these made their diversity data reports public? And now we're seeing the trend in Silicon Valley that companies are now opening up their EEO reports for the world to see, and they're making a commitment to us that they're going to work with us in trying to improve it.
Yeah, I just want to say I appreciate what you're doing, and our companies realize there's a lot of work to be done, and they're making strides to improve. But I do think that these platforms do create a lot of opportunities, both for direct employment and the opportunities that we see on the sharing platforms that we're talking about today. But thank you for your work on this, and it's something that I know our companies are striving to do better.
I really want you to pay attention to it, and I won't call the CEO's name that I met with in Silicon, but all of you would recognize the name. He told us that there's a correlation between the bottom line and diversity, that the profits are really related to diversity and inclusion. And if you can get those two in sync, you can really grow the economy, grow the consumer base, and the company can do very well. So I look forward to working with you. And thank you, Mr. Chairman. I yield back.
Chair thanks the gentleman. Gentleman yields back. Chair recognizes the gentleman from Kentucky, Mr. Guthrie. 5 minutes for questions, please.
Thank you, Mr. Chairman. I appreciate it. I'm also a member of the Education and Workforce Committee, and we're having a meeting downstairs. Sorry I didn't hear all of this on a joint employer and the definition of joint employer. So I say that because I'm from the business world as well, and labor issues are something I've worked on and understand that labor classification issues are at the forefront of this debate. But so this is Mr. Beckerman. So in your testimony, you urge Congress to consider the real benefits of this sharing economy before moving too quickly into regulations. And what are some of the most critical benefits offered by these platforms that would be affected if service providers on these platforms are classified as something other than independent contractors?
Thank you for the question. I think first and foremost, there's incredible flexibility, and we've heard a lot of that today from Ms. Smith and others. On all these platforms, it's opt-in, and a majority of the people participating on these services are doing so part-time. They're doing it to have new income, not necessarily replacing a full-time job that they had before. And the ability to be your own boss. That's compelling to a lot of people, to be able to set your own schedule and really work for yourself as a small business person, and I think that's probably top of the list.
Okay, again, Mr. Beckerman, while we consider the extent of consumer protection regulations that should exist for sharing platforms, we have heard today that reputation mechanisms like rating systems lessen the need for certain consumer protection regulation. What kinds of consumer protection regulations should apply to apps such as Uber?
There's a few things. When it comes to data security and privacy, I just want to note that there are laws in the books and regulation, the FTC and other places that apply to all platforms, online and offline, and I don't think there are gaps in that kind of coverage. But when it comes to rating systems, there's incredible transparency and accountability that really never existed before, being able to rate the driver and have the driver rate you, and on Airbnb and other platforms, being able to see people's past experiences. And I think this is a new innovation, and it's important.
And what about apps for TaskRabbit? Same situation? Well, thanks. I know in Uber you can see the picture of the driver, and I understand there's been a couple instances in Chicago where somebody's pulled up, so you're looking for an Uber driver and it's not an Uber driver. So those protections seem to be in there if somebody checks their.
I think those protections are working, and what you see with all these platforms, you mentioned TaskRabbit and others, trust is first, but also a community has been created where you want to have a higher level of service for your customers because you know you're being rated on an instant basis and you're being rated many times throughout the day. And I think that helps what you're asking for.
I think in the instance in Chicago, people were getting in cars. Somebody just pulled up and looked like they were looking for an Uber driver. But if somebody followed what Uber provided, either the picture or the car, the make, the model, that wouldn't have happened.
If they don't know your name, don't get in the car.
So, Mr. Lieber, I'm going to. How much time did a person usually spend trying to track down local professional services before Thumbtack?
That's a great question, and we don't have a scientific answer for you, but I'm sure from your own experience, you've tried to hire somebody for your house, a plumber. And, my parents have lived in the same house for 40 years. They still don't know who to go to find a plumber. So they found that Thumbtack is a really useful tool for them to bring somebody to their house who's trusted and is going to do a great job.
Does Thumbtack reduce the cost of looking for, I guess it's self-evident in your answer here, but reduce the cost for looking for the right professional?
On both sides of the marketplace, we believe Thumbtack dramatically reduces the cost, both search time for the consumers. It's time you could be spent, hanging out with your kids as opposed to calling people and trying to find somebody who's right for you. And on the pro side, finding new business is a really hard thing to do. Finding a new client, you put an ad out in the paper. Maybe, the name of our business is Thumbtack because it's named after the, pins people used to put on bulletin boards, where they would just put this up on the bulletin board and hope that somebody called them. And that system's really outdated today, and we think that we're lowering the cost of finding them new customers.
Thank you very much. And it is good for businesses to have that opportunity. I always say that a lot of difference in our system in the world and everywhere else is that everybody that becomes a plumber or skilled trades eventually usually becomes their own boss, especially in the plumbing business and HVAC business. You see a lot of people with vans with their name on the side, My Name Inc., and they're driving around, and helping them market is a great opportunity for those who provide it as well as those who receive it.
Absolutely, and a lot of these are skilled professionals who are really great plumbers, but maybe don't know how to run their own business, and that's where companies like Intuit and Thumbtack come in to help them market themselves in a lot more sophisticated manner.
Because they're very much in demand. Mr. Chris, you had a comment on that?
Just to pile onto that, one of the, having served small businesses for a number of years, one of the top challenges that our small businesses face is finding customers. And many of these new platforms are now allowing them to, again, with the push of a button, find that customer, which allows the individual to spend more time actually making money.
It only works because you have customers looking for them. So it's a win-win.
It is.
Thank you very much. I appreciate that. Now I yield back.
Gentleman yields back. Chair thanks the gentleman. Chair now recognizes the gentlelady from Indiana, Ms. Brooks, 5 minutes for questions, please.
Thank you, Mr. Chairman, for holding this fascinating hearing. I co-chair what's called the Women in High Tech Caucus. Here, it's a bipartisan group that is about promoting women in leadership in the tech companies as well. And so I talk with a lot of tech companies, particularly in central Indiana, where I'm from, and I can't tell you how exciting the sharing economy is to so many people, and whether, particularly when we have hackathons, whether it's for businesses or whether or not it's for state governments or federal government, there is so much energy and excitement about the sharing economy and the platforms that are coming forward. We also have what's called 1150 Academy in my district, which is teaching people how to code, which is so critical to all of this and all of these new platforms. But I have to tell you, there's a lot of concern, and particularly generational, probably more than anything, when it comes to this sharing economy and the questions about the sharing economy. So I think this type of hearing, and I hope, Mr. Chairman, there are going to be more hearings on this, because I don't think it's really cut and dry on a lot of these issues. There are a lot of questions. But I do have to ask, Mr. Beckerman, and I'm a former deputy mayor in Indianapolis, and I know that state and local regulations can really get in the way, and I know that a lot of these platforms and a lot of these innovations have struggled with state and local regulations, and I know that it often can be used in many ways to block competition and to block innovation. Can you share a bit more about what we, in looking at what the federal government should be doing, what lessons can we be learning about what's happening maybe at state and local issues around the country?
Sure. Thank you. Competition obviously is important for consumers in all communities, and our companies have made great strides in working with local mayors and local city governments to make sure their services are allowed to operate in those communities. But I think the leadership of this committee and of Congress, of talking to your local mayors and even your governors and taxi commissions as appropriate, that they should allow these services to operate because it's benefiting consumers. It's providing more choice, it's lowering costs, and that's what this is really all about.
And so is it an education process you're undertaking with individual mayors or at association meetings, or how are you doing it?
Both. The companies are actually working city by city, town by town, state by state, in a lot of places. And you asked for some examples. We have seen areas where they're putting new regulations in place, such as saying, for on the ride-sharing side, you have to wait 40 minutes before a car picks you up, which obviously does not have any consumer benefits at all. It's just meant to block competition. Or regulations that say the minimum fare must be $50, which is 10 times the fare of a taxi, which again has no consumer benefits whatsoever. And so those are the things we're trying to get rid of.
Thank you. Mr. Chris, there were conversations and discussions about protecting consumers' financial data. And obviously, in today's day and age, when we rely so heavily on technology for so many financial transactions, how is this different, if it even is different? How is the sharing economy any different than the other ways in which we transact business, or is it essentially the same?
I think in many ways it is still the same. All of our partners, including ourselves, need to think of data privacy as chief, and we need to maintain the stewardship that we have of our customers' data. When it comes to consumer protections, again, I think there isn't much difference that we've seen in the number of companies. I do want to mention, we've talked a lot about Uber as an example here today. It should be said that we've seen over 200 other platforms, sharing economy platforms, coming in that are impacting all sorts of different businesses. And
Can you give us some examples?
Absolutely, and these would be ones that might surprise you. So we've talked some about food delivery and caring for your dog, but there are some that are disrupting industries like the legal industry. So one of our partners, Up Counsel, has provided an opportunity for lawyers to come in and, again, find clients that are perfectly matched to them. Or a company called Hourly Nerd, which allows MBAs to be able to be partnered with the right Fortune 500 company as well. So this is very broad, and again, we're very early in this journey, but with over 200 now, it'll be amazing to see how that grows over the next few years as well.
I'd be curious, Mr. Lieber, with respect, because I think one of the things that we are often concerned about, whether it's with Airbnb, whether it's with Uber, whether it's with the providers that or the people who are going into the homes, providing services, the safety issues that are discussed. Can you talk about that a little bit with respect to Thumbtack and how you educate your customers as well as the people who are providing the services? What kind of safety issues are addressed with respect to whether it's criminal history background checks, whether it is just educating your customers about what kind of background checks have been done or not been done, and informing them?
Yeah, so we do background checks on every professional who's active on Thumbtack to make sure that we're delivering somebody that we can be proud of to your house. Marketplace integrity is incredibly important to us. We have a large team dedicated to that. We kick off any bad actors who we think have violated our principles of marketplace integrity, and we do everything we can to ensure that we're delivering a trusted professional to your house. Reviews are a part of that. We try to do everything we can to collect and aggregate reviews so you have the most information to make an informed decision. And we police this very, very carefully.
Thank you. My time is up. I yield back.
Gentlelady's time has expired. The chair thanks the gentlelady. Chair recognizes the vice chair of the full committee, Mr. Lance of New Jersey, 5 minutes for questions.
Thank you, Mr. Chairman. I apologize to the panel for being late. I was in continuing legal education over at the Library of Congress in the hopes perhaps someday there will be a lawyer app that will employ me. Mr. Baker, I certainly understand your point. Would it be fair to say that the distinction between independent contractors and employees is an ongoing discussion in our society and has been for quite some time?
Sure. I mean, the issues certainly predate the rise of sharing economy companies.
For example, I sold real estate. I was not the broker. I was merely an agent, and I was treated as an independent contractor, and I think that is traditional in the real estate industry. Is that your understanding of it, how it works in real life?
To be honest, I couldn't tell you whether most realtors are treated as independent contractors or employees.
I believe most salespersons are treated as independent contractors. Although there certainly is significant guidance. I was trained as to how to answer the telephone. I was trained how to try to sell real estate, but definitely I was an independent contractor. You state in your testimony regarding Uber and Lyft that there have been several cases brought before the NLRB and in federal court arguing that those working in these companies are employees. Has either the NLRB or the federal courts adjudicated any of those questions yet?
No, there's been no final adjudication on that. Those cases are still pending.
I see. And do you expect that there will be a decision at some point in the near future?
It depends on your definition of near. I suspect we're talking about a couple years before we get anything resembling a final decision.
I see. And anything that is adjudicated by the NLRB then potentially could be appealed probably to the United States Court of Appeals for the District of Columbia. Is that accurate?
Exactly, yeah.
Yes, thank you. Mr. Beckerman, I also was greatly interested in your testimony, and you point out that this is a growing phenomenon in this country, and that there are internal checks regarding all of this. Could you elaborate a little greater on your point of view in that regard?
Absolutely. There's certain transparency and accountability and trust features that are built into the platforms. Again, on the rating system is something that doesn't exist for many of the incumbents. On being able to track your location in many cases does make you safer, or if you end up leaving your purse or your bag in the car, that helps you retrieve that. And so there are a lot of things built into technology, and that's worked out very well.
Thank you. I point out particularly of 4 points that you articulated. You stated, second, in weighing these clear benefits against perceived harms, lawmakers should consider whether sharing economy services may in fact be safer for consumers when compared to their incumbent counterparts. And number 4, recognizing that Sharing economy platforms already self-regulate through various mechanisms that are hardwired into the technology, such as consumer ratings, payment systems, intense competition, and GPS tracking. I tend to agree with that. This is obviously a growing phenomenon in this country. And Mr. Beckerman, you state that in a pre-internet age, the yellow pages served as a similar function that Lyft and Uber serve today. Would you explain your point of view regarding that?
Sure. At the basic level, these are technology platforms that are removing friction between the transaction, and they're connecting the supply and the demand, be it a plumber or a driver, a home that you're trying to rent, and having that frictionless transaction, I think, helps the economy and certainly helps the individuals on both sides of the transaction.
Thank you. Finally, in the last 50 seconds, I'll relate a story. When I sold real estate, the real estate broker told me that if the property was 20 minutes farther west from where the potential customer wanted to live, I was to create interesting conversation in the automobile and drive as fast as I could. Thank you very much, Mr. Chairman. I yield back 27 seconds.
The gentleman yields back the chair. Thanks. The gentleman. Chair recognizes the gentleman from Mississippi. Mr. Harper, 5 minutes for questions, please.
Thank you, Mr. Chairman. Thanks to each of you for being here today. And Mr. Chris, if I could ask you a question. What has been your clients' feedback as they transition successfully to sharing platforms as a source of income? And then are they happy with their choice? So looking for what the feedback would be that you're hearing right now.
Thank you for the question. The feedback we're hearing right now is certainly a happiness factor from being able to be their own boss and control their own income streams. The shadow to that has been not sure that they understood they were becoming a small business when they entered into this. Again, if you think about for many of them, the feedback was it was so easy to download an application and create income, and then I realized I now have to pay quarterly taxes. I have to track my expenses. I have to track mileage. Many of these folks are working in an app that's on the palm of their hand, and yet when you ask a driver to open up their glove box, it's littered with receipts. And so this change in mindset of going from, hey, this was very easy to enter into this economy has been a true positive, with the shadow of, I now have a whole bunch of obligations that I wasn't sure I was set up to do.
And has there been a change in the way that is now initiated so that there's a better understanding from the beginning for these?
There isn't. I mean, this is why we created the QuickBooks Self-Employed product that we have, and we've seen, certainly we track our customer success metrics as well, and we've seen that with our product, we've put $3,800 of tax savings back into our customers' hands. The difficulty, though, is there are still challenges when January to April of every year, when a independent contractor receives a 1099, their first call is to their platform, who sent them the 1099, and the response from that platform is, I'm sorry, I can't even answer your question. You have to go find a tax professional. Right. So there are still some real challenges in the system that I think we could, again, create some clarity around to make things easier.
And you had mentioned in your testimony that people who provide services through sharing platforms would benefit from some guidance from the platforms on how to operate successfully. And I guess that would be the main takeaway then of what you're saying is that training up front, that knowledge up front would be the biggest benefit for them.
There are a number of our users that have come in that, again, didn't even know what they were getting into. They're happy to be where they are, but being able to provide some guidance from the platforms, again, not necessarily providing the answer, but at least providing the guidance would certainly be beneficial.
So what they have to do on their income tax, but also the regulatory requirements that may go with that as well, it's sometimes can take some of the joy out of it if they don't know that on the front.
What we've seen from our customers is once they know, and once they're able to do the calculations through our product or through whatever, they're happy to do it.
Good.
It's the lack of transparency and the lack of understanding that's the most difficult.
Mr. Passmore, when we talk about property casualty insurance and what that entails, what are the incentives for the insurance industry to participate in the sharing economy?
Opportunity. Insurers like to sell insurance, and
Sure.
these businesses certainly represent opportunities to do that. by developing new products. Good example is the transportation network companies. Particularly in the states where they've put in place the clear insurance rules, so the rules of the road are established and certainty is established. We've seen companies introduce a lot of different products. A PCI member company, Erie Insurance, was one of the first to introduce an endorsement that you could buy for your personal auto policy to provide coverage for transportation network drivers. And other companies such as Geico and Progressive and MetLife and Home have all introduced products. Some have introduced even separate policies just for TNC drivers. Some have had partnerships with some of the TNCs to develop products just for their drivers.
So do you see the future, how would you describe the future for property casualty insurance in this economy?
Well, I think it's a great opportunity for insurers as long as there's clear rules of the road and certainty has been established. With the TNCs, we had a little bit of a bumpy road, but we got there in the end, and we're making excellent progress on it now. We may not need that kind of clarification in every other kind of sharing economy model, but there may be some needs for that. So the ability to develop that certainty so the insurance industry can grow along with the sharing economy is going to be very important.
And with that, I yield back, Mr. Chairman.
Gentleman yields back. The chair thanks the gentleman, and the chair wants to thank all the members and the witnesses for being here today. Seeing that there are no further members wishing to ask questions, I do want to thank each of you for participating in today's hearing. Before we conclude, I'll yield to Ms. Schakowsky for unanimous consent request.
Yes, I'd like to add a statement of Vaughn Armour from the New York Committee for Change into the record. Testimony that I referred to earlier of Inder Parma, a New York taxi worker, and let's see, Uber worker actually. Testimony from the Taxi Cab Limousine Paratransit Association, and testimony from Working Partnership USA, San Jose, California, into the record.
Without objection, so ordered. I also want to include the following documents to be submitted for the record by unanimous consent. A statement for the record from the American Hotel and Lodging Association, a statement for the record from the Hotel Association of New York City, a statement for the record from the Texas Hotel and Lodging Association, a statement for the record from Vaughn Armour. Without objection, so ordered. Pursuant to committee rules, I remind members they have 10 business days to submit additional questions for the record, and I would ask our witnesses to submit their responses to those questions within 10 business days upon receipt of the questions. So again, thanks all to everyone here. Without objection, the subcommittee is adjourned.